What we're going to do is we're going to first look at the market. I know there's been a lot going on in the market lately. I've been getting a lot of texts as to what's happening in the market. We're just seeing chaos everywhere. The market's heavily declining. Everything's down, right? You have your stocks that are down. You have your crypto that is down. Pretty much we're seeing overall declines across all sectors except some of the commodities. And this is kind of a time to just let's address that, right? Let's think about what exactly is going on with that. And so when we look at today's market on your screen, what you'll see is that we have a chart of the current S&P 500. I'm gonna highlight a couple things here. And so as of market close today, S&P closed at 4,356, which truly represents like a negative 8.6% yield or return rather year to date. So that means that so far this year, if you put your money in an S&P 500 market fund, you haven't made any money at all. In fact, you lost money. And why is that? That's because the market is sort of in a correction period. And we see that being affected not only in the crypto, not only in the stock market space, but just across the market in general. And so 1231, you see here in the top circle, you see that 1231, we were up a lot, and now we're down to where we are. Bitcoin is also down about 28% over the last month. And you also see that gold and oil, while they are also market factors, they're actually positive. And we're going to touch on this as to why commodities are positive during this time, whereas the rest of the market is facing a downturn. So let's think about why the market is acting like this, right? And we have some of the biggest causes here that are displayed on your screen, one of them being inflation. And so we know that we've all seen that prices are going up, right? Not only in the cars, not only in the used car market, but prices everywhere are just skyrocketing. And that's because of inflation. Inflation currently has increased to about 7%. It's probably even higher now. And that's just being seen across the overall economy. Inflation is rising. You also have rising rates with the Fed trying to talk about raising these rates just because we've been in a low interest rate environment and because money is too easily available. Money has been cheap. And so the Fed is trying to curtail that, but we'll see what their stance is on that. They're going to be talking about that today and tomorrow. And that's what the market is really trying to see what the Fed, Jerome Powell, is going to do about raising rates. There's also a lot of political uncertainty. Like you can even look at Russia and Ukraine. You can see there's some tensions over there. You can see there's a lot of political uncertainty within the US itself. And all these factors have their own part to play currently in the market downturn. Then you also have low growth forecasts. The IMF came out today and cut some of the growth rates for the world and the US as well. You also have the biggest one here, which is the pandemic. So Omicron, Delta, whatever name you want to call it, COVID is still alive and doing well. And that's another major aspect that is really just being a driving force of the market being in this situation. And then lastly, but not least, you have overreaction and fear. And so normally what happens is that when the market really starts bleeding as it has been doing this week and last week, you start to see some people who start to sell their positions. Why they sell, there could be a multiple amount of reasons as to why they sell, but all of that goes to form an overreaction as well as built up fear and leads to even more selling. And besides even selling, it also leads to some people, because the market continues to drop lower, they get margin called. And that's when you're using leverage and the bank calls you and says, hey, your positions are too low. We need to either sell your positions or get some money back. And so you're seeing a lot of those factors playing a role in today's market movements. And so that's just the current market overview. And it's important to know where we're starting with, because that's how you begin to develop a strategy as to how you're going to go about and start investing for this year. The first thing in investing is always understanding the current environment, understanding where the opportunities lie in the current market, and then making a strategy and going from there. So these are the kinds of things that you want to try to look for when you're trying to evaluate where the market is and what's going on. So the next slide is we're just going to talk about what investing is. So what we want to do is just want to remind ourselves exactly what investing is. And so when people think about investing, right, a lot of them, they come back to me and they say, oh, like Wolf on Wall Street, right? That's what this guy is. And if you've seen that movie, it tells a story about a guy. He started a Wall Street firm and instantly made a ton of money. He ran into some problems with the Federal Reserve and with the FBI, but at the end of the day, he still made a ton of money. And eventually he got arrested. But the matter of the fact is people think that you will just go into the market and just instantly make a ton of money. And so they have this kind of idea that, hey, look, stocks only go up. And I know that this was rampant throughout last year, where everybody was like, hey, look, I'm just going to take some money, put it in the stock market and make money. They go run to the market. They download an app called Robinhood. They throw in their money, and then they see that they're starting to make some gains, right? It looks green, everything's going fine. And they're like, why didn't I do this before? They start to get really euphoric, not really understanding the fundamentals in the stock market, but just understanding that their portfolio is growing. And if their portfolio is growing, then it's great. Nothing else matters as long as that number is going up. So they're happy. They're saying, this is so easy. Investing is so easy. And they start thinking, oh, money grows on trees. Let me just put my life savings into these stocks. Let me just put my life savings into these crypto coins. And they just go from there, right? Until one day they check their account and they see that, oh, wait, it's not really going up anymore. They see that it's not really going up. And in fact, it started going down, which is what you see in the market today, that the stocks have just been going down. And then they start to say, okay, I'm losing everything. What's going on? They don't really understand what exactly is happening. They look at their account, it shows a huge loss. They pretty much lost their money. And if they were using leverage, they lost even more than the amount that they put in. So much so that they get to a new place where they make a new decision. Those people make a new decision and they say, okay, you know what? Investing is a scam. I'm not going to invest anymore. Investing is a hoax. It's rigged. Nobody knows what's going on. Investing is not for me. And they wind up at that decision, which is a decision that a lot of people come to just because they didn't really understand what investing was. They didn't really understand the strategies involved in investing. They didn't really understand the elements of the market. And because of that, it led to them losing their money. So pretty much when you enter the market without a plan, you're essentially gambling, not exactly investing. And so that's a key point of what investing is. Investing is making sure that you have a plan. So I have a definition up here on the screen that says, setting aside money that you don't depend on and buying assets that will appreciate, which is another word for grow, in value and possibly pay dividends. So when you think about something that will pay you dividends or an asset that will appreciate in value, you have many different asset classes. So you would have, let's say, art, right? The Mona Lisa appreciates in value. You have crypto that normally, depending on what type of crypto that you get in, would normally appreciate in value. Bitcoin was appreciated in value until recently. Then you have the bread and butter, which is stocks and bonds. JJD is highly involved in stocks, and that's where we spend most of our time. And that's what our major service is, investing on behalf of others. So there's so many different asset classes, and it's really just trying to choose which asset that you want to focus on and making sure that you're steadily putting money into there because you're expecting it to appreciate in value. So that means, let's say, for example, stocks, finding stocks that you know are good companies, strong companies, clean balance sheets, and that will be expected to appreciate in the future. And not exactly going out and, maybe you hear something randomly and then you go and buy it without even researching what they do or researching what their product is or how they make sales or how that company makes money. Not doing any of the above is definitely going to lead you to failure when investing in the stock market. And so that's why investing is it's really important to, one, understand why you're investing and know exactly what you're investing in. And so I'm just going to harp on another point of investing and why investing is key. And we discussed a lot of this on the first investor forum. And if you want to go back and review that, it's on our YouTube channel. But I'm just going to drive home a few points as to why investing is important. So yes, I know I was just saying that you really have to educate yourself, but there's tools to get around that, right? Not necessarily get around it, but tools to help you. And one of those tools are called like ETFs. ETFs are exchange traded funds that sort of mimic certain benchmarks in the market. So for example, the S&P 500 is a basket of stocks, which pretty much has grown over time because it's reflecting different stocks. It has moved, and this is how you're able to track like total market movements. And so what you're looking at here on this chart is just showing S&P 500 graph spanning all the way from 2008 to 2019. And what you can see is that this chart keeps going up. And if you're able to see on this chart, there's certain key points that I've highlighted. So for example, in 2009, we all remember what happened around 2008, 2009. That was the financial market crash, right? And you see that S&P 500 line, it starts to dip. However, what happens after it starts to dip? It starts to increase. And then you see also that was when, you had the H1N1 virus, the global pandemic, all these different events that came up. I'm just circling a few of them just so for reference. But despite all these different events, the market has continued to go up. And what does that mean? That if you had put money into the market, no matter when you had put it in during this past decade, if you had put it in, you would be making money today. Because overall, in the short term, like you see for the past 2 weeks, the market can decline, the market can decrease. But in the long term, history has shown that the market continues to increase. History has shown that your money is going to appreciate in value. And that's why investing is so key. Putting your money into the market and giving it the amount of time needed for it to grow. So back to what I was saying earlier, where some people get the idea in their head after they lose money, they don't want to invest anymore. The reason they don't want to invest anymore is because of what happened. They had a short-term view. They paid attention to what's going on in the day-to-day, and they lost all their money because they either put something into something that they don't know about and it instantly lost, or they didn't give it the amount of time that it needed. And so that's one of the key parts. Time in the market is a key part. And so just to further drive this point, look at the past recessions, right? We've had a recessions in 02, 08, 09, and even recently you had the recession caused by the COVID outbreak in 2020. But despite these recessions that you see on this chart, you see that the stock market overall has continued to increase. And then one more chart just to drive this on further. This was last year, 2021. So remember, there was a few key events that happened, like US inflation spikes, certain international events that occurred, the Delta variant started to spread. And yet look at the overall trajectory of the market, it has continued to increase. And so what is that all going to say? Time in the market is better than time in the market. There's a lot of math that can be shown on this, that even if you had called the market at its lowest points, somebody that had left their money in for the overall time would still end up making more than that person who would have timed that market. And we'll probably touch on that more. And so this is another thing that we did talk about, where the strategies to invest in include, having a set amount that you're going to be investing, trying to find like $20, $50, and doing that every month, trying to just put it into something like an S&P 500 index, or with a firm that you trust that could invest on your behalf, like JJD, and trying to let that accumulate some time and grow to its potential. And so when we're quickly looking at how to strategize, right, I just want to remind everyone that on the JJD site, you can always see the strategies that we are going for, and you can always see what we're holding. And this could possibly also help you in your own portfolios. And so looking at some of what we're doing, let's just go through some examples, right? When you're looking at how to strategize, remember, you have to think back to what's happening in the market. So for one, interest rates, right? What are they doing? They're going up. So what happens when interest rates are going up? What companies, what industries are making money, right? The first one is banks, right? Banks are making money because they loan out money. So as the interest rates go up, they could charge higher amounts on their loans, right? So you have financials, then you have consumer staples because they pretty much sell items that are deemed necessary, right? No matter what, you're still going to buy toilet paper, right? You're still going to buy certain materials to continue living. So you're going to look at those kinds of stocks, right? Like Costco, Walmart, JP Morgan, Bank of America. These are companies that tend to thrive in high interest rate environments. In high interest rate environments, things like growth, tech, they don't really do well, right? Because the reason they don't is because they're growing, they're heavily grown, and in order for them to grow, they need to borrow money so that they could fund their growth. And for them to borrow money, that means they get charged interest. Higher interest rates means they pay higher costs to get that money. So that's why what you're kind of seeing in the market right now, that growth tech, they're kind of falling. Then let's do two more. Inflation. What's happening with inflation? Inflation is going up. So what tends to happen when inflation goes up, right? Items become expensive. So that means that the people that are producing those items, they're going to do well, right? So you're looking at commodities, and this goes back to gold and oil, which are positive right now. Commodities tend to do well in inflationary times, as well as value stocks. So companies that are mature and could give you like dividends and things like that. Basically anything that could give you a higher return than the inflation rate. And then one more, uncertainty into US, right? So whenever you're facing political uncertainty in one area, it's time to diversify outside of that area. With this uncertainty, what tends to do well in this place? That's when we're going to look at international stocks. So international, depending on what the international is, right? You have to really evaluate exactly where we are, but trying to diversify away from the US is always a good call in this case. And so thinking about all these factors, these are some of the things that you want to think about when you're looking at the stock market, the current environment, and trying to determine what opportunities lay out there for you. And at the end of the day, don't be afraid to invest. We're definitely going to continue to do some more investor forums like this. And every investor forum is going to have its own topic where we're going to continue to teach, continue to educate, because that's one of the main goals of JJD, to not only invest, but also to educate. And so given that, I'm going to stop the presentation there and do a quick round of Q&A if anybody online has any questions, and then we'll just go from there.